Got Kevin on the line. Kevin, thanks for joining us. What's on your mind, Kevin?
Good afternoon, guys.
Good afternoon.
I got a two-part question about refinancing. So you're saying you gave an example of from 5% to 4%. Say on a $250,000 loan, how much money would that save a guy over the 30-year term?
Okay, so over a 30-year period, dropping the interest rate 1%. Let's throw out a number. Let's say it's a $300,000 mortgage.
Okay.
So
Right,
$300,000 mortgage.
Right.
And
we'll see how fast his calculator skills are.
They got to be better. They got to be better than mine.
Just make sure, quick. There's a 5% refinance to a 4%, so 1% decrease, right? Is that your question?
So that's going to be about $170 a month savings, right? Just an interest
wow.
rate. But
Okay.
but I go back to also it has a lot to do with, are you currently paying mortgage insurance? For example, maybe you're in an FHA loan currently, okay, and you have mortgage insurance that the only way to get rid of that PMI that you're paying every month is to refinance into a conventional loan. There's these
So it could be $170 bucks plus.
Oh, I've seen it be 170 plus 270 more.
Wow.
Just to get rid of mortgage insurance. Absolutely.
So I am in a conventional loan right now, but I've never really thought about refinancing because I thought, 0.5% or percent ain't going to save much over the years, but it sounds like I'm wrong.
So about what year and month did you buy that house?
About 4 years ago, April.
Okay, so property values and a ballpark purchase price?
We paid like $255.
Yeah, so not even knowing much more about that, I would say that you're probably in the 300 range value-wise, 320 maybe. Not even knowing where it is. It's just using kind of the average increase in values in Bakersfield over that same time period. Were you a 5% down, 10% down? How much did you guys put down when you bought it?
It was 5.
Yeah, so you're exactly the example that I'm giving. So you were 5% down. You're paying mortgage insurance. You can now do a refinance, get an appraisal will probably come in somewhere in the 3.25 range, something like that, putting you in a whole different loan-to-value ratio. So your mortgage insurance drops off. No telling how much that's saving you, but I would imagine it's somewhere between $150, $200 a month, plus the interest rate savings of that other $170 per month that you're going to save on the interest rate. So you probably even have the opportunity to change from a 30-year loan to a 15-year loan, okay, and probably not have much different payment.
That'd be
I would
awesome.
say, I would say your payment would it may even go up a little bit. Maybe it goes up $50 or $100 a month, but you're going to pay it off in 15 years instead of 26 years that you have left over.
Yeah, man. No, I get that. That'd be good.
Yeah.
And you give an example about $300,000 value of the houses that are selling around us are in like the 285 range. So
yeah,
I don't know.
Well, even with 285, I mean the example still works. You may not be able to get rid of mortgage insurance entirely, but taking your mortgage insurance down from a 95% loan-to-value ratio down to an 85% loan-to-value ratio, to give you an example, mortgage insurance is tiered, okay? So a 95% loan needs more mortgage insurance than a 85% loan. So mortgage insurance is required on both, but it isn't created equally, right? The 95% loan-to-value mortgage insurance you're going to pay a lot more for that mortgage insurance. So if we could get you down to 85% loan-to-value mortgage insurance with that higher appraisal, you're still going to pay a lot less. Maybe your mortgage insurance right now is a couple $100. Maybe it goes down to $40 a month, something like that.
Oh, okay. And then I guess my second part of the question is, if you refinance, are you still paying a title company or closing costs, or how does that
you
work?
still got closing costs. In fact, that's about the only cost that you have. Okay, so this is another misconception about refinances, that they're super expensive. So out of pocket. Yeah, and out of pocket, it might feel a little bit expensive. But let me kind of break down some of the numbers for you, okay? Mostly what you're paying, the actual cost that you're paying for a refinance is escrow, title, recording, kind of what's known in the industry garbage fees. It's a whole bunch of little fees that add up to about, on a $300,000 house, maybe $1,800 a month, or $1,800 total to close, okay? But what you do have to do is you have to refund your new escrow account. So you're going to prepay property taxes and insurance, okay, for a year or 6 months or a year, kind of depending on when you're closing. But you're going to refund that impound account. That's that account that you pay to your mortgage each month that then comes out once a year and pays out your property taxes and insurance. So when your actual money out of pocket funding that escrow, it isn't going to be $1,800. It might be $4,000 or $5,000, which can be rolled into the loan, by the way. But
Oh, okay.
That $4,000 or $5,000 is not cost to you because of the refinance. It's money that you're going to spend anyway on insurance and property taxes. It's simply that you're just funding this new loan that hasn't been funded. But here's the bonus, okay? You currently have a mortgage with an impound account, and that impound account may have $1,500, $3,000, $4,000, depending on where you're at in the cycle during the year. You've been paying to that account every month. So when you're done with your old mortgage, you've refinanced, you have your new mortgage, and you're going to have to fund that account. You have your old account that has money in it. Well, you get a refund on that, right? Anything that didn't go to pay towards insurance and property taxes, you get. So you're going to pay some in, and then you're going to get some back out, and that number should be pretty close to a wash. It's not always exactly on.
Equal, yeah, that's what I was thinking. Okay. Well,
it should be really close. It should be close enough to where it's not a hit to your pocketbook. But what people like to do is they like to go ahead and roll that $3,000, $4,000, $5,000 of funding that new impound account into the loan. So your loan balance goes up slightly, but not because this is the misconception, not because the refinance is costing you an arm and a leg. It's simply that it's going up. We're raising the loan balance so that you don't have to come out of pocket that amount of money. Right, so you don't have to come out of pocket that $4,000 or $5,000.
So if you don't have the cash, to come up with that, there's a way to do it. Still save that money and roll it into the loan.
Exactly, and then you get that check back at the end.
Kevin, thanks for the call. Appreciate it. Excellent question. Let's go to line 2. We've got Jerry on the line. Jerry, thanks for calling. How can we help you out?
Yeah, real quick. I saw a sign the other day. I looked at this lot, and it says it's available for sale or venture capital, and I was thinking, I don't know the first thing about buying land and the liabilities and the taxes, but if I just want to invest like in a specific lot, do they have, is that what the venture capital is, where you go in with a group of investors to purchase that lot?
So, yeah, thank you for the call too, Jerry. So was the lot to be used for residential or commercial? Could you tell by looking at what
Probably
it was?
Commercial. It was on a commercial street like Gosford or Callaway or Renfro.
So that could be a lot of that could be a lot of different things. Sure, that could be a lot of different things. That could be someone who owns the lot and may not know exactly what they want to do with it, but they want somebody to buy it with you. You partner with them with the idea, or maybe they have you who's going to buy it, put a building on it that you're going to occupy, and they're either going to help you finance it, build it, so it might be kind of a partnership opportunity is what they're looking for. But what I find on vacant lots around town a lot is just a sign that simply says available. And I think what that usually is indicating is, look, if you want us to help you build to suit a building on that property, if you want to buy the property, it's for sale. If you want to rent the property, it's for lease. And I think that those kind of signs typically are just give us a call and let's discuss what you want to do. A lot of times when I get a telephone call from somebody who says, what's the price on this property, or what do you want to do on this property? A lot of times what I'll ask them first is just, what do you want to do? And then how do we get to that goal of yours, and how do we make that happen?
We have a second home on the coast at 4.75% interest, currently owned for 6.5 years. Is it time to refinance?
I'd like to combine that with this next question. So we have 2 text questions. We have another one where it says, I have a 4.5% interest rate, which is valued at $155,000. Should we refinance? Are interest rates low enough to make it worthwhile? And it's kind of a blanket answer that I have on this, and that is let's take a look at the numbers. So it really is a case by case situation. And what does it hurt, right? To roll through the numbers, go ahead and get some, take it. Okay, here's what you have now. Here's what the numbers look like. Here's the savings over time. Like I mentioned to the last caller, maybe there's even the option to change from a 30-year to a 15-year. I'd mentioned going down to, say, a 4% interest rate on a 30-year. I mean, you might as well knock off another 0.75 of a point on a 15-year. So there's even an added benefit to trying to accelerate it. So is the right answer absolutely yes or no? It's dive into the numbers and then compare the numbers, and they speak for themselves. I mean, I think that's so every one of these where it's kind of, is the timing right? Should I do it? My answer to them is, we need to talk, because let's just dive into the numbers. It takes about a half an hour to take all the information that we need. It's not even a full application. It's not a loan application. In fact, all I need is a current mortgage statement, and from that, I'll run the rest of the numbers and give you 2 or 3 scenarios. Here's what can be done.
Do they have to go into the office?
No. Everything can be done over the phone.
Gotcha.
Everything can be done over the phone. We use, all the latest, greatest. DocuSign. Have you guys ever heard of DocuSign?
Oh, yeah.
Oh, yes, we have. I love it.
Well, we do a lot of DocuSign.
So, this is interesting because we can take this into just a bigger conversation about decision making about personal finances. And you can have this discussion when it comes to legal planning, when it comes to buying real estate, stocks and bonds, and that is you got to be in the game. So if you're wondering, is now the time to refinance because you've seen rates come down, do exactly what Scott said. Well, find out. Sit down with someone. Sit down with Scott. Let him run the numbers for you, and the math will speak for itself.
The math speaks for itself. And the only thing that you have to lose by not doing it is sort of having that, walking around with that question mark over your head. I wonder if I should. Well, you run the numbers and then because like I say, the math doesn't lie, right? You know pretty quickly, okay, this is a good thing for me or it's not.
Gotcha. Another question that says, is there a downside to refinancing in that when you refi, you have to have a new appraisal, and your property taxes may increase due to the possible increase of property value based on the new appraisal?
I really like this question. So this is not something I have ever seen happen, and the appraisals, the appraiser does not talk to the county assessor's office.
It's not filed, right?
It's not filed,
exactly.
So
it's not recorded.
It's two completely independent things that go on. So on a refinance, yes, you are going to have an appraisal. That is, the question, part of that answer to part of that question. But will the appraiser then go out of their way to contact the county and make sure that your property tax, assessment goes higher? The answer is no. They're just not connected in any way.
Does anyone do that?
Only the property.
Have you ever seen a case when it does get reported and now
when a property sells? So if you're gonna, and I'm sure Kyle, you've done a lot of this with estate planning with transfers of ownership. And there's certain percentages that come in, and for reasons of why you're transferring ownership that come in, the county will look for an opportunity. The assessor's office in any county, right, wants to reassess.
Revenue, right.
If it can go higher, they want to be able to collect more taxes. So there are those opportunities, but they only arise when there's a transfer of ownership, has been my experience, or where you've pulled permits and you've done some extensive work to the property and there's a reason. Like, for example, if you've added a pool, well, now your house is worth more.
Right.
And so, the county assessor's office will pick up that permit that you pulled and that you put in a pool, and then they're going to want to do either a physical inspection or just understand kind of the numbers behind it so they can reassess the property higher.
And to relate that to kind of the estate planning, when we're recording deeds, transferring documents from husband and wife as joint tenants to their trust, there's information you put on the deed that lets the recorder know what you're doing. You say this is a transfer solely, between husband and wife to their.
How important is it to put that on there?
Very important.
I mean, it's like night and day important, right? You could have somebody who has a property that they've owned for 50 years, have almost no basis in it,
of $50,000 or whatever.
$50,000 now it's worth $600,000. If
Right.
they don't put the right information on that transfer, right?
Correct.
What happens?
Mm-hmm. Yeah, you're looking at reassessment potentially.
I'm always amazed at what I can learn about myself from other people, because sometimes people know things about me that I didn't even know. It looks like we have a situation in this right now. Next listener comment says, I've enjoyed watching Scott's TV commercials for years now. He appears friendly and trustworthy. I would probably use him if I ever needed him. I'll go to the rest, the next part of the text here shortly. But Scott, do you have TV commercials?
I don't have TV commercials.
Okay, so they're confusing you for somebody else.
Well,
I think I know who it is.
Maybe there's somebody else out there with TV commercials.
But I can say that he is friendly,
just as trustworthy as I am.
I could vouch for that.
I might even be slightly more trustworthy than that guy.
So one nice thing about Bakersfield, he has a pretty small community. Business community is fairly small. If you go ahead and just Google Scott Hanson and kind of look at what he's done and check out the website and stuff like that. But the rest of the question is this: I have also heard that the oral contracts have been judged to be as legally enforceable as written contracts in every industry except real estate. Is this true? In general contract law also? So this is a perfect question for you two to go
and there's like three of them, and I want to get some clarification here. It says except estate. So they mean estate planning
real estate.
or real estate?
Real estate. If you read down, it says it meant real
I'm
estate.
not getting this. Okay. Anyway, I'll take the first part of that question, Scott. So yes, oral contracts are absolutely as enforceable as written contracts.
What's an oral contract? I mean, I know what those words mean, but I mean, what constitutes an oral contract? Hey, man, I'll give you $100 next month. Is that we now are in a contract?
No, you have to have offer acceptance and consideration, right? So I can't just say I'll give you $100 next month, and you say, oh, we have a contract. Well, no, because there was no. Obviously there's an offer, acceptance, but where's the consideration? What consideration did I get for giving you $100?
I see.
But let's say, for example, you're sitting here, Dave, and you say, God, I'm really tired of my car, and I just want to sell it. I'm like, oh, what kind of car do you got? And you've got, well, I've got it's a 2015 Dodge Ram, and I'm just looking to get a car. Well, what do you want for it? And you say, let me get back to you, get some numbers. You give me a call and say, hey, and I'll take 22 for it. And I'll say, you know what, I'll give you 20. And you say, all right, we got a deal. Okay. That's a contract.
Oh, really?
That's
Interesting.
That is
and that's fully
contract.
enforceable.
Fully enforceable.
So if the neighbor stops by and says, "Oh, I'll give you 25 for it," you can't back out.
Exactly. That's
because
the
you've
breach
agreed.
of contract. Yeah.
Wow.
So, but here's the interesting part.
Dave's wondering, how many contracts have I made? And
I'm in a lot of contracts.
So, wow, I need to make some phone calls, guys. Do you mind finishing up the show?
So I might have 7 to 8 wives out there. Who knows?
So you have enforceability, right? And that's the crux of his question. Is an oral contract as enforceable as written? Absolutely. Here's the problem, proving it, right? You have to be able to prove that a contract existed, okay? And that's where it becomes difficult with oral contracts, right? If there's no witnesses that
sounds like an impeachment hearing right now.
if there's no one, I thought we were going to get into impeachment.
Yeah, right. That's what everyone wants to hear.
So, right, if no one heard this communication, right, then it's my word against yours, and then your case becomes about my character, your character, my veracity for truth, your veracity for truth, bringing character witnesses, and then ultimately a trier of fact and decide which one of us is truthful. And
so you're better with a paper contract.
So yeah, if you can get to
Makes
paper,
it easier.
get to paper. Get the 4 corners of the paper, what the document contains. That's going to be your most enforceable.
Yeah, where I see it a lot in real estate is I have the fun of working with a lot of new people into the business, both realtors and lenders. And so I get a lot of questions like this. And something I just stress to them a lot is just when you are representing somebody, and Kyle, you can kind of attest, so when you represent somebody, Kyle, you are their attorney, right? And so when a realtor, though, is involved in somebody's purchase or sale of a home, or even as their lender and they're working on financing for them, they have to be really careful because they are representing that person. And so I talk to them a lot about, you got to be very careful what you say. Make sure that you're conveying your buyers or sellers, your clients' true intentions. Make sure that you're conveying that clearly and that there's no embellishment one way or the other, because you can really get caught in a situation where you may have said something or alluded to something that wasn't exactly what your client was trying and intending, right? And so I don't know that definitely necessarily falls into the category of being a binding contract at that point. But I do find that people in the real estate business can get themselves in trouble, not because they're intending or they're bad people.
Right.
It's just that you do have to remember that, okay, I'm representing someone's interest here. It's just really important. Everything that I say needs to be spot on, and I need to represent exactly what they want in the situation.
And you see that most commonly in real estate contracts with addendums, right? Typically, you have an offer.
Yeah, you'll see them with addendums, or you'll see a lot of people will be talking on the phone and kind of just get things worked out over the phone. Okay, I'm going to send you over the addendum, and then suddenly the addendum isn't what one of the parties said, right? And now there's a problem.
Right.
And okay, now well, who said what? And so that's where I think the smart, the thorough real estate professional is really going out of their way to make sure that things are covered,
precise and
doing
accurate.
exactly
Very
what
good.
they need to do.
Awesome. Good stuff. Let me throw out the phone number again. We'd love to join the program. You can shoot us a message or you can call the program. It's 842-5376. That's 842-KERN. If you're going to message, include the area code of 661. And by the way, if you're hearing this and you're like, hey, I like what I hear, I want to talk to Scott Hanson. I want to maybe refinance. Here's his phone number, 464-8000. 464-8000. And Kyle Jones, you're hearing what Kyle has to say, and you might be in need of some estate planning, some legal planning. Well, give Kyle a call at 833-1090. That's 833-1090. And also, always remember, if you hear someone on a radio program that you want to talk to and you were driving and you couldn't write down the number, you can call our office directly, and we'll give you those numbers. I think it's probably a good time to talk. Kyle was in our office, actually, in the MoneyWise offices for years. We were actually had the same space. And we felt that was one of the benefits of working with MoneyWise, is there are lots of different experts. Well, we had, fortunately, I think it worked. The business was able to grow, and people like this. Well, it worked so well that we've outgrown the space. So we've had to separate physically. Right. But Kyle and Scott are in the same building, and we're hoping that in a year or two we'll all be back together. But we're still all together in terms of what we're doing and working together to make sure that our clients get the best possible service with multiple experts. All right, we got another listener question here. It says, can you refinance a VA loan into another VA loan to lower your rate? And then also, what is Scott's company and phone number? Again, it is Level 1 Financial, and the phone number is 464-8000, 464-8000.
So I love VA loans. They're the best loans out there by far. Our country and government has done a great job with creating the VA loan program.
So why do you hate veterans?
I love them.
Okay, I must have misheard now.
I'm from a family with some veterans in the family, and so I have real respect for what they do. But the VA loan is just a fantastic loan. It's by far the lowest interest rate. It always is. When you compare it to conventional FHA, you can have a zero down. There's all these great things about it. Another thing, though, that they've done is they've made the VA refinance very streamlined. So it's even less costly and it's even quicker. And so yes, the answer to it is absolutely yes, it can be done, and you should. If it's another one of those things. Run the numbers. We'll help you run the numbers. You take a look. The numbers speak for themselves.
Sweet. Let's go to the phone lines. We've got Chris on line one. Chris, thanks for calling. What's on your mind, Chris?
Hey, just wanted to make one quick correction to an oral contract being enforceable. There is something called the California Statute of Frauds. They teach it to you in law school. There are certain oral contracts which are not enforceable, obviously anything involving real estate. But if it involves the sale of goods in excess of $500, it has to be in writing. Also, any agreement for the sale of personal property in excess of $5,000 must be in writing. So if you got a real cheap car, you're okay. But if the car's worth over $5,000, it better be in writing or it's not enforceable.
Excellent, Chris. Thanks for calling. Appreciate that.
Yes.
Kyle, you want to add anything to that? Or?
No, that's perfect.
Yeah, Chris, thanks so much for the call. We appreciate it. Stephen, do we have any giveaways today, by the way? Nope. All right, I was going to give him something, but I guess we won't. Thanks, Chris, for the call. Appreciate it. Let's go to Tina on line 2. Tina, thanks for calling. What's on your mind?
Hey, I started with a jumbo loan, and I'd like to know how much the jumbo loan is now.
Well, $484,000.
If I can refinance and get out of it, where does it start at?
Yeah, $484,000 is the county limits for Kern County currently. So, what's approximate loan balance now?
Right around there.
Oh yeah, you'd probably be okay. And so the other thing is that as a mortgage broker, okay, so we're a mortgage broker, so we can basically fund loans through anybody out there who's funding loans. Okay, so we can go out and so right now, as an example, we have a program where we can exceed the county limits but still come under conventional financing.
Oh
guidelines.
God, how do you do that?
But it's a
what
temporary
are the criteria?
thing. Well, just to qualify like you would with a conventional loan. It's not
so
bad.
Why do they put a limit if I can go around that?
Well, it isn't always the case. So what happens is that individual
she's so close, right?
Individual lenders, okay, wholesale lenders will come up with their own overlays and programs. So there's the government programs, there's the government guidelines, and that if you want to fit into Fannie Mae guidelines, you still have to follow those guidelines. But a lender with a line of credit or amount of money that they want to employ will actually say, well, let's create this slightly different loan. We're actually going to go out and we're going to say we will do a conventional loan, but up to a higher amount. Or this happens a lot with all sorts of different nuances in the guidelines. So they'll keep the loan. They don't plan to sell it. And by doing that, they're actually funding a loan that they're comfortable with, and they don't have to conform exactly to, say, Fannie Mae, Freddie Mac guidelines.
Okay, if that's not possible, what is the interest rate on a jumbo loan right now?
You know what? So much of it comes down to FICO score. So for, say, 740 or 760 FICO score and above, it can be down in the low fours.
Jeez. Okay, and what is a regular one right now?
Did that sound good? You kind of made it sound like maybe
that
wasn't
discussed. I don't
discussed.
even want to tell you what mine is.
So that must have been a
Is
good.
yours higher or lower?
Oh, higher.
Higher, yeah.
Yeah.
Okay. Well, you should. I'd say you give Scott.
Well,
a call
also, so your loan to value ratio is going to be different now. It's like the caller from before, right? So now that you paid down, some time has passed. Not only are you trying to get down below that county limit to refinance into a conventional loan, even if you can't do that, even if you're going to refinance into a jumbo loan, again, your loan to value ratio is going to be so much better. So you're still going to benefit from that by getting a lower interest rate.
Okay. And how much do you think, if it's right around that thing, that it would cost to refinance?
Well, it's going to be based on dollar amount. And as I mentioned before, like a $300,000 loan might have escrow, title, and other costs of somewhere around.
Let's go up to $480,000.
Yeah, it'll be a little more. It'll be up in the $2,000 range, $2,500 range.
Really?
But, yeah.
One of the reasons why we always say listening to the MoneyWise program is just the first step. And the reason why it's the first step is, we're being a little general here because a lot of questions really come down to your specific situation. Your income, when we're talking about real estate, your income, how big the loan is, your FICO score, with investing, it certainly comes down to your risk tolerance and your age and what you're wanting to achieve legally. Of course, your estate is unique from your neighbor's estate. So we try to give you enough information, but also remember you're probably not going to get enough to act fully on your own just by listening to the program. So we're always here for you. The MoneyWise guys are here for you. Scott Hanson is here for you. Kyle Jones is here for you after the show. So give them a call, and they can walk you through all of this and get you back on track financially. Anything that was left unsaid with those calls, Scott, that you want to go over, or did we pretty much nail all of it?
I think we did. I think this is a topic that's on a lot of people's mind right now.
Yeah,
with
obviously.
Interest rate being so low, and especially when you look back 50, 60 years of interest rate data, I mean, we are at the lows, right? So where are we at? We're at the lows, everybody. Yeah. So if you've ever heard of a concept of buy low, sell high, right? Lock in at these low rates. And, yes, have they been low for the last 6-7 years? Yes, they have, but they are especially low right now. So I can see why it's on people's mind. I can see why we're getting these calls about this topic because our phone is ringing off the hook about the same thing.
And remember, folks, it's not about timing it perfectly. Imagine, playing a par 3 and you tee off, you land on the green, you're a few feet from the hole, and I'm going to take a mulligan on this. I didn't get a hole in one. You should be happy. You're on the green. Well, folks, we are on the green here. Rates are very, very low. They might go even lower, but the risk is not doing anything and sitting on the sidelines. Steven's making fun of me for making a golf analogy. Yeah, I am not a golfer by any means. Did I use the right terminology, guys?
Yeah,
mulligan on the green.
I'll take a 2-foot birdie putt all day. You're not going to see me taking a mulligan there, that's for sure.
That's awesome, Kyle. When it comes to legal planning or estate planning, do you get that sort of same behavior? Someone like trying to time it, or
yeah, it's not apples to apples because you're not really timing a market. You're not timing an industry and trying to figure out what the interest rate is going to do, what real estate price is going to do, what stock price is going to do. But I would compare it in the sense that it should be events in your life that dictate when that's necessary, when it's time to take a look into that. So the example I gave you off the air, Dave, is let's say that you're a younger person, single, no children, you have a great job, good income, heavily invested in the market, say in your retirement account, any qualified account, 401k, something along those lines, but that's all you really have. Well, maybe your circumstances aren't where you need to have an estate plan. You don't need a living trust at that point. But as certain things happen in your life, that's when it's time to take a look at that, right? You get married and you have young kids. Well, it's now we have these young kids, and so I want to make sure that I name someone to be the legal guardian should something happen to mom and I. I want to make sure someone I name as trustee to handle the estate to make sure that they can handle these kids' funds until they're of a mature age, whether you think that's 18, 21, 25, it's all up to the individual. Let's say you buy a house, you own real property now, or then you buy a rental property. All these events in your life as they come up,
circumstances change.
That's when it's time to take a look at it. Absolutely.
Good stuff. Hey, Kyle, Scott, thanks so much, guys, for coming on.
Thanks for having us.
You'll be here.
I want to come back.
Yeah, we'll have you back. We'll have you as long as you say please.
Hey, I've had so much fun today.
Yeah, we have too.
Yeah, let me know.
Yeah, cool. Right. We'll do it. Really do a great job. Again, folks, you can give them a call. You like what you hear. You're in the market for refinance, buy a property, whatever it might be. Give Scott a call. Help you out.